Well, good afternoon, everyone. I'm CAMELIA Martin. I'm a managing director at FALCON Capital Advisors, and as my title suggests, I work in advisory, and we work with all kinds of mortgage industry participants as they look to adopt the use of electronic promissory notes, or eNotes, and eClosings. So besides being in Vegas on a Tuesday, which is exciting in and of itself, I'm incredibly excited to be here with this panel of eMortgage experts. You seriously cannot find a group with more collective expertise on eClosings than this group right here. So I'll let them each introduce themselves, and in case it's not obvious from their titles, talk a little bit about what their role is.
Okay, I'll start. I'm Chris McEntee. I'm president of MERS, Mortgage Electronic Registration Systems. For most people who are familiar with it, the original business model, of course, is MERS. MERS is mortgagee, but we're also the owner of the e-registry, which is going to be really critical in the future state of digital infrastructure in mortgage finance.
Thanks. Hi, I'm Margo Tank. I'm a partner at DLA Piper. I'm the U.S. co-chair for the financial services sector. Prior to being in private practice, I was counsel on the House Financial Services Committee. I then left and started getting interested in how to take the mortgage process electronic, and this is back in 1998. I was part of a group that drafted and advocated for the e-Sign Act, and have been advising companies and reviewing platforms and helping with eNote implementation since 2000, the enactment of eSign.
Good afternoon. James MACMILLAN from Deutsche Bank. I sit within the document custody business, which sits inside the trust and agency service business. I've been in corporate trust for about 20 years. We are invested and active in eNotes and have an eVault. So I'll be speaking to specific aspects of what we're doing in relation to some of the bigger topics we're talking about here. So,
great. Thank you. So over the past several years, the industry's focus has been on digitizing the front end of the mortgage process. These are on areas such as customer acquisition, point of sale, borrower interactions, underwriting, but in most cases, that process switches back to analog at the closing. So we're going to focus today's discussion on this part of the digital mortgage transformation, namely the use of eNotes and the eClosing process. An eClosing is simply defined as the act of closing a mortgage loan electronically. But the second sentence in this definition is really key. More simply put, if just one document in the closing process is signed electronically, that's an eClosing. So there's a chart here with all the various types of eClosings. And Chris, I won't ask you to explain each and every one, but a lot of folks in this room are probably wondering, why are there so many different permutations? Why are there so many models of e-closing? Could you give a little bit of color on why these variations exist?
So my response is, how many attorneys are out here? Yeah, so you'd appreciate this, right? No. But look. Let's go back. It's fundamentally dirt law transitioning to a different paradigm, right, in terms of execution and moving assets. I don't think it's going to become uniform and standard overnight. It's not. It didn't happen in the securities industry. It took a lot of counterparties getting together and realizing that in the best interest of the client, here's what we think we need to do in terms of creating standards. I think that's a movement afoot already. And I think in terms of the consumer experience, people don't want to hear why they can't do this, or I did that, or I did this in this state, and I couldn't do that here. And so I think that, for the reasons that are obvious, there's an economic interest, but there's also a good policy objective.
Yeah, that's great. And I would say, and I'm looking over at Margo and James here as well, I think if there was one key takeaway from this slide, my favorite is to say, you can e-close, right? There's always a way. It doesn't have to be an all or none approach. Are there any comments that you might have in that regard?
yeah, I think, to put it simple, eNotes can get sold into the agencies, right? So Freddie and Fannie fully accept the eNote, and people on this stage, as well as ourselves as a document custodian, we participate in that process. So be it through direct sale or indirect sale, that happens today.
Yeah, I would look at it as an opportunity to put a toe in the water. You may want to do some or part of the e-closing. Even prior to getting to e-closing, you might want to do the application disclosures electronically and do the e-closing maybe with some of the closing disclosures electronically, but the promissory note on paper. Or, there's so many different variations, and it really just depends on where you are in your maturity in your business model and whether you're ready to go E. But I look at it as not confusing, or not that the industry isn't ready, but it's an opportunity to step in where you're ready to step in.
Yeah, and I'll just echo the fact that you got to be thoughtful about doing it. We talk to clients all the time that say, hey, this is what we want to do, here's what origination footprint looks like, and it does take an effort. And so for the most part, it's not something that you'd say, hey, look, it's really easy, it's not the easy button, it's not Amazon. Though who knows, maybe they have a patent to figure this out. But at the end of the day, though, when they sit there and say it's the difference between closing a loan, having a good experience, having a cost-effective delivery, people are going to figure it out.
Yeah. So for each document that's signed electronically, if you think about it, that's one less document where you can miss an electronic signature. It's one less document that needs to be scanned or shipped. And so there's a path for everyone here, regardless of who your investors are, who you're selling loans to, who you're buying loans from, what jurisdictions you're closing loans in. There's an opportunity to begin an e-closing. The other concept we're going to cover today is electronic promissory notes, or eNotes. The promissory note is perhaps the most important document that's coming out of the closing, and eNotes have some special characteristics. Some that are similar to paper notes and some that are very different. Margo, I'll ask you to walk us through what an eNote is, and if you can, also explain some of these similarities and differences for us.
Sure. It's hard to just talk about the eNote, so let me just preface it with what I'm going to talk about is really the ecosystem or the infrastructure that you need to do this eNote, this e-closing situation. And I'll touch a little bit on some issues that both James and Chris are going to talk about. So eNotes are what otherwise would be an Article 3 negotiable promissory note, but are instead in the form of an electronic record. The legality of eNotes was established in 1999 with the enactment of the Uniform Electronic Transactions Act, and then the e-sign, the Federal Electronic Signature and Global and National Commerce Act followed on in the event that states didn't quickly adopt the UETA to enable eNotes. E-sign came in and became the federal backstop. These laws essentially create a structure, a parallel universe for Article 3 notes, for the creation of an eNote and the ability to transfer the right to enforce it from the original lender to subsequent purchasers, free of intervening claims to the interest in the eNote. These laws accomplish this by replacing the requirements. I think you can turn the page so you can see the table, what we're going to talk through. They accomplish this. So on the left-hand side, we've got paper notes, and on the right, eNotes. Well, I'm not sure which way you're looking at it. But what's happening is that the requirements for possession and endorsement of a paper promissory note are exchanged with the concept of control and the transfer of control. So a person having control of an eNote is the holder, but now in the electronic universe, it's the controller for purposes of the UCC. And the delivery, possession, and endorsement are now no longer required. So to show or to have control, we start talking about what kind of system do you need to do that. And you need a system that's employed for recording or evidencing the interest and subsequent transfers of interest in eNote, a system that will reliably establish the person in control and the location of the eNote. So lots of legal words, but we're going to talk through what that exactly means and how it's the wording of the statute, I'm reading right out of it, reliably establish a system. but it's combined with all the other aspects, which is the language in the promissory note. We'll talk about that, the MCENTEE registry, and an eVault, and how that entire ecosystem works together to get to being able to do an enforceable eNote. Once we satisfy all these particular obligations that we're going to walk through, the person identified as the controller, the former holder in the paper world, obtains rights equivalent to those granted a holder of a paper promissory note, which includes the right to enforce the note. The legal framework is combined with an agreed-upon industry infrastructure to achieve this result. And this is really critical because you can't just look at the statutory words alone. You have to understand the infrastructure. The infrastructure includes uniform note. Fannie and Freddie came up with a uniform instrument 20 years ago that has very specific language. It's referred to as paragraph 11 or section 11. And it says in that section that the note is a transferable record, which is the term of art. Everyone agrees that it's a transferable record. The borrower understands that it's electronic, that they're signing it electronic. It then has clauses that talk about the identity of the note holder or subsequent purchaser and where to find out that information. Where do I go? I'm now on notice because I'm looking at the note, and where do I go to find out who the owner and where the note is located? And the language goes on to say that it should specify a note holder registry. If the note holder registry is specified and if the note is registered, then the authoritative copy, which is what we're all trying to protect, which is another way to say what the eNote is. It's the definitive copy will be the copy identified in the note holder registry. So really what's happening is what we're talking about is what is the one, which is the one, who is the holder, which is now the controller, and where is it? Where is the bits and bytes? Where are they sitting? And how am I going to be able to tell that the one that the holder says that they have is really the one? MCENTEE registry, going to talk about that, became the industry standard. It was contemplated in 1999, the drafters of UEDA in the comments, about having an external mechanism to help identify and create an ecosystem where you could reliably establish who owns the note and where the note was located. Because there's no such thing as an original in an electronic environment, you need to have this type of external mechanism that will also record any subsequent transfers down the road. With respect to a location, so I don't want to get into too much what you're going to talk about, but it dovetails or completes the process where you have registered the note, it's hashed, it's recorded at MERS, we know who the holder is, we know this identifiable sort of hash number among other identifiable numbers, and we now know where the note is sitting because MERS doesn't store the note. The note is stored in an eVault.
Yeah, we were blockchain before blockchain was cool.
Yeah, exactly. So the lenders are going to need to be prepared to understand the entire ecosystem, not only the paperwork and how to get the electronic equivalent of an Article 3 promissory note, but how that all fits into the ecosystem.
But if I could step in for a moment, though, such a great view of dimensions of the transaction for practitioners out here, people, bankers, intermediaries, dealers, what have you. You got to understand that there is an ecosystem that supports all this. So there's legal and technical infrastructure that's there today, and it's scalable. And I think we see it through the GSEs. GSEs have obviously been pioneers in it, but I think it's also applicable to future states of PLMBS. Certainly it's active in auto and other ABS, instruments. And so I think just the idea that this is novel is more because of a little bit of a buzz around, well, it's digitization and all. But I think if you look at the whole business process, basically what we're trying to do is present a really clean product. And my comment is, the future of digital is through data. right? We all sit here and we want to have the data. The data is good, it's clean, it's active, it's fresh, it's real time, and that's the promise of going this route.
Yeah, and I think, you know, you're all looking at us, and I know this is a ton of information that we're kind of giving to you at one time, but it was really important that we get this legal foundation out there. So eNotes are legal. You can do them in all 50 states. They move differently. They're transferred differently from paper notes. And these e-commerce laws that Margo just described require this mechanism to identify a single authoritative copy of the note at any given point in time. So that concept of original is replaced with an authoritative copy. So if you keep in mind that eNotes, like any electronic file, can and will have multiple copies, and they're going to look technically identical to each other, the role of these next two systems are going to make a lot more sense. So the eVaults serve as a mechanism to store copies of eNotes. They help identify which copies are authoritative and which are retained or non-authoritative copies. And they retain them in such a way to maintain the integrity of those eNotes. They're also the mechanism that interfaces with the MCENTEE registry, and we'll talk a little bit more about that next. But first, a question that you probably are all thinking is like, okay, well, wait a minute. If the eVaults are storing the copies of the eNotes, you know, what does that do to the role of a custodian, right, in this e-mortgage ecosystem? How does that change? How does it stay the same? So we're fortunate to have James MacMillan on the panel, and with Deutsche Bank being, I think, the first, if not one of the first custodians to adopt the use of eNotes. I'm assuming you've gotten this question before.
Right. So I think it may be helpful to kind of dumb this down. So I'm going to dumb it down a bit. So the MCENTEE registry system, and I shouldn't be talking for MERS, but I'm going to, you know, but because we're a participant, I'm going to go ahead and do it anyhow. So, you know, you mentioned blockchain. I think the MCENTEE registry system is kind of like a reverse distributed ledger in that the MCENTEE registry platform essentially records the chain of ownership, okay? So it basically says who owns it. And location, location, location is really key. So that basically says where the authoritative copy is. And I call it a pointer. So you have the MCENTEE registry system, and it points to, we as custodian, for example, Deutsche Bank, right? We're the custodian, we hold the authoritative copy. Tomorrow morning, Deutsche Bank could disappear for a day, but we would still be holding that authoritative copy. So when we reconstitute, for example, right, we will still be the holder of that eNote, okay? And then the eNote, what is it? It's a HTML, XML document. It's an electronic contract. So you've got the data that sits in the XML, and you have the view, what you actually see, which is akin to like the promissory note that you would see today in paper form. That's the HTML, okay? And that travels, it's a file. It travels from one eVault to the next, and it can go through the MCENTEE delivery system. So that's kind of the FedEx box, if you will. And so we participate in the space. We receive the eNote, and we transfer the eNote out to other eVaults. So in our case, we're actually a custodian to, you know, we're governed by bi-party agreements, right? So we may have one-to-one relationships, or under tri-party agreements where we have a warehouse bank, right, the funding facility, to that mortgage originator, where we host the eVault. You have a mortgage originator, they do an eClosing, the eNote gets sent to Deutsche Bank, right? So deliver to Deutsche Bank, hold it on behalf of the warehouse bank. The warehouse bank has that secured interest. And then a decision is made, okay, we want to do a sale. We want to sell it off to, you know, and really the big players right now at this point in time are Fannie and Freddie, right? They make a decision, okay, I want to sell it to Fannie or I want to sell it to Freddie. And we have the role of doing that transfer function. While the eNote sits with us as custodian, our responsibility is to review it, right? Make sure that it's a valid eNote, much like we would review paper, and then we do a certification process on behalf of the agencies. That started off as a stare and compare exercise in the early days. So we acquired our eVault in 2017-ish, went live May 2018, and you know we have that role. again, receive the eNote, stare and compare exercise to where we are today, where we're actually fully automated. So we have automated routines and API connections with third-party systems where we take in these eNotes, we do automated reviews, we validate it, we certify to it, and we deliver it out in somewhat of a fully automated process. And in this journey, we've done several strategic partnerships. So that was a...
That's great. So in short, there is a role for the custodian, right?
Yes.
It's different. How you do the role is different, but the key tenets that you're achieving are largely the same, right? Ensuring the validity or the authenticity of the collateral. So when you hear the word MERS, we've already mentioned the MERS registry a couple of times, but let's talk about it in a little bit more detail. You probably think of the MERS system, right? So that's the system that tracks changes to mortgage servicing and investor rights, where MERS is holding the mortgage lien in the land records as the mortgagee. But as you now know, MERS runs another system, the MERS registry, and that system has a very critical role when it comes to the use of eNotes in the market. So Chris, as the president.
Yeah, I'll give you a little bit of color. I mean, look, there was a big headline last year in the sense that the registrations that occurred in terms of eNotes on the system were, kind of small, certainly post-crisis, and then there was, this hockey stick growth. Quicken took credit for it, as they should, because they figured this out. They're smart business folks, and they figured out a model in terms of execution and delivery. But the benefit, to go back to what James and Margot were saying, is that the authentication of your collateral, right? At the end of the day, we all, we don't want to go back to 2007 or 8, but you got to show up and say, yeah, I have the rights to foreclose or exercise some rights against this piece of collateral. And as we get more and more digitized, that's going to be critical. It's going to be critical that rating agencies obviously have taken a bigger interest in this, and we have some conversations. I'm sure probably there's people in the crowd today who we've had conversations with, like, well, why does it work this way? Why does the infrastructure work this way? I will, kind of pivot back to what James was talking about, almost like a reverse blockchain, right? But think about it. It's a giant network, okay? At the end of the day, distributed ledger technology, because everybody seems to think, oh, if you had a DLT or you had blockchain, you wouldn't need MERS. I mean, again, MERS is the original infrastructure that did this, right? It's cross-referenced, it is distributed, and the design was very elegant. It was 2004. It was certainly ahead of the stage in terms of current state. But there are other asset-backed industries that don't have this type of instrument, right? They're not instrument, certainly not something like MERS. But you think about the value of collateral, right, and the requirements that you have, certainly as packagers of securities or structured finance. This is something that should be, not an afterthought, right? This is critical to credit availability. It's critical to structure. It's critical to investor acceptance. And we think that we add real value, certainly for $4 per unit, and to the extent that we can create this delivery mechanism, and this goes back to the consumer experience as well as what the e-closing, which we started with, is what are people sitting at the closing table looking like, right? They're looking at tablets, they're looking at their phones. NBA had an interesting statistic, I think it was NBA, but it was saying more than half of all homeowners, right, in household formation in the next decade will be closing through their handheld instrument, right? They will not have a desktop, they won't have a laptop. So, the industry has to go out to these people and meet them where they are and give them the tools to be able to feel confident that everything that's going on behind that execution has been done correctly and right. And nobody questions, hey, when I do my RSA token or I do whatever type of security instrument that exists on your phone, it's the same thing with the e-registry.
So I see a couple familiar faces in the audience, and if you know me well, I love process flows, and I found a way to sneak one into this deck. So what I think I'm going to do is just try to tie all these concepts together, right? We've talked about eNotes, we've talked about eClosings, eVaults, and the e-registry. In this example, the e-closing includes an eNote. The eNote and any other electronic closing documents are presented to the borrower in an e-closing room. The borrower reviews the documents and applies his or her electronic signature, and then that tamper seal that Margo described is immediately applied to the document, right? So that tamper seal is basically considering the contents of that smart doc eNote. It's applying a unique digital hash. That eNote is stored in an eVault. That eVault's integrated with the MCENTEE registry. The lender registers the eNote on the MCENTEE registry. And in that process, the eNote's actually presented to the e-registry. The e-registry recalculates the hash of that smart doc eNote, and it records that along with other information about the eNote. And that's going to become important in a minute. So then, when that lender's ready to go sell that loan, they do two things. They initiate an e-delivery, so they're sending a copy of the note to their counterparty, and they're also initiating transfers of those rights holder positions on the e-registry. So at registration, that lender is the controller in the location. Controller, party with the right to enforce the note. Location, party with that authoritative copy of the note. I just sent a copy of the note to my investor, but it's just a copy. It's not the authoritative copy. That investor takes the copy of the note through its eVault, bumps the hash up against the e-registry to ensure that it's a match. It's telling me, as the investor, it's the same thing the borrower signed at closing. There's been no alterations or modifications to this document. And then if my vault's set up this way, I'll automatically accept those incoming transfers from my lender, and now I'm the controller in location. And now that same copy of the note that I had that was just a copy, that becomes the authoritative copy. So it's not like there's one authoritative copy that's handled back and forth, right? They're all copies. What determines that it's authoritative is your position on the e-registry and that indicator in your eVault.
And I'll just chime back in to say, and the section or paragraph 11 in the eNote tells you to go to the MCENTEE registry to find out all that information. So you're on notice. It's a critical component.
Yep. So I thought this would be a good place to pause, because I know we've shared a tremendous amount of information, and see if there's any questions before we move forward. Yes.
Well, no, look, I mean, a shameless plug for a company that we own is called Simplifile, right, which is the e-recording leader. And for the most part, the counties that have adopted, so you got to go county by county, right? There's limited incentives from the public record standpoint, but the ease with which it can get delivered in is very valuable, both for the counterparty, right, for the closing and settled entitlement agent. And then to the extent that the lender is getting immediate audit trail, right? I'm getting an affirmation. I know exactly what my closing fees were, right? My joke is always like, everybody raise their hand who got a check for 75 cents, right? Or 85 cents. And you're like, okay, it was 3 months after close. That check cost the lender, $100, right? So immediate, instantaneous, but it differs based on county. So, and to your point though, I do think the jurisdictions are evolving, okay?
Sure, I think the numbers are, it's at least 80% now have e-recording. And with respect to the rest of the life cycle, all the disclosures can be done electronically, truth in lending, trade, everything can be done electronically. Your 4506T, income verification, that can be signed electronically. Your note can be signed electronically. Electronic notarization is 100% enabled. That doesn't mean that every state is on board with it, but from a legal perspective, there's authority to accept it. And there are probably 22 states now that are even doing remote online notarization. So there's a huge tidal wave of moving this process forward. So it's, and that I would say, back to that very first slide that we had up about all the hybrid, part of the reason for that is some of the things that you just said. But that is absolutely 20 years since eSign and UETA. We're really ready. The
Yeah, but-
tipping point is, it really is here. All the pieces are in place.
And to get to your specific question, I think the next step is, what's your counterparty going to think about, right? Am I going to accept the file? Is it going to look like this? To the extent that James is a trustee that I know, I've got the security. And there's a lot of complexity. I will say, too, the other conundrum you're against is that there's a lot of fintech vendors that have moved into the space, probably exhibitors here as well. My joke is always that they're long on they're long on tech and short on fin. They don't understand this is a highly compliant and rigorous legal framework that has to be fulfilled. Okay, it's not just, hey, look, I closed in my jammies on an iPad. You got to have all I's dotted, T's crossed. And so, but what I would recommend to you is just say, look, toe in the water, go to the counterparty, say, hey, would you accept this? 5% of my production, 8% of my production.
Yeah. You'd say the goal is to figure out where can you slot into this matrix, right? We say be as easy as you can be, right? Which isn't always as obvious, right? You've got to consider investor acceptance, RON, e-recording, all sorts of things.
Yeah, and I don't want to make it sound, I'm just echoing what you're saying. It's enabled, but it's not easy. And my kids say to me all the time, like, really, you do this all day long? We just push buttons. How hard could this be? But if you actually try to write a legal opinion from soup to nuts through a whole process, it could be 80, 90 pages. I mean, it's complex, but it works. The framework works.
And since you mentioned the other documents, we're focusing on the eNote today, but the e-registry is also enabled to allow for recording of the hash of, I think it's up to 200 other additional ancillary closing documents. So to the extent that your providers would be enabled to create a smart doc of another type, whether it be the security instrument or even hash another type of electronic document, that could serve as another resource to verify the authenticity of those documents against the registry.
Yeah, I saw a question over here. Were you talking about like non-agency eligible or HELOCs or, I don't know, seconds? I mean, I think what we're seeing is emerging, and we've had this conversation, and, it goes to a point about, and I think it pivots off the previous question, is where can I get liquidity, right? At the end of this conference, if, bottom line is about liquidity and trading. And to the extent that I could find counterparties where if I have an instrument and I can package it, I can collateralize against it. So my background is with the Federal Home Loan Banks, right? I want to be able to sit there and say, if I pledged my eNote, it's as good as any other instrument, right? Wet signature or otherwise. To the extent that it's a HELOC or the language within the instrument, and this is where it's starting to kind of evolve a little bit, is where the agencies have cut the path here. Let's be perfectly clear, right? They've designed the infrastructure to the extent that there's model language that can be applied. We've talked to MARGO about it. Say, show us how would you create a pool? What would the infrastructure look like? What would the indenture language look like? And we've had conversations in this conference around what model language would be there for non-agency eligible instruments, but eNotes. Does that answer your question? No. But again, shameless plug. Why not? For $4, right? I can sit there and say I can cross-reference this hash, right? There'll be dozens of people who can say, well, you can do this in a blockchain on a cloud and spin plates and fly to the moon. This infrastructure exists today. It's scalable. It's very valuable. The rating agencies certainly appreciate it. There's eNotes that are published into most of the MBS. I mean, certainly cash window delivery of eNotes goes into MBS. I think what will be interesting will be case laws that start to evolve around some of the things Margo talked about, right? So we have a white paper in terms of enforcement of eNotes because of the MRSI registry and the value of doing that. I think longer term, there's questions around new technology, what will happen, what case law will look like for remote online notarization. I mean, we're not up here saying, okay, we can stay ahead of that because, most people in the crowd appreciate, dirt law is going to always lag behind technology. But for the most part, we think we have a really solid system that's enforceable, it's built, and it's scalable.
So I think one of the things that makes the whole ecosystem really valuable is the e-delivery function. Have you guys ever considered making that available to other asset classes like unsecured consumer or auto?
We have, and I think to the extent that I think, look, it was a design and infrastructure that was, born of the agency model. But, and there are electronic chattel, there's electronic notes, and Margo could, I'll pivot over to her because she's very steeped in it. I think the e-delivery mechanism is saying, what's my access to the network? All my counterparties are on the network, right? I mean, this is one of the biggest blockchain problems that you have, is going, well, if I'm de novo, I need all my counterparties on there. Right now, we have 135 participants on the e-delivery platform. So, and James is, as a custody entity, sits there on behalf. There's all the protocols are already built in. So, I think you make a good point. Could we bring more assets through it? We'd like to. We'd like to see use cases. So,
I guess I would just add that outside of mortgage, and whether you expand to include other non-mortgage, auto finance, like electronic chattel paper, there are billions of dollars in assets already. And it's just a different mechanism. It's more of an internal registry rather than an external registry. But you can create that same idea with hashing and holder and record of ownership and in an internal proprietary system, almost like essentially what an eVault is doing. And then all the players who want to transfer, own and transfer would be members or participate with system rules in a particular system. So there's lots of different ways to do it, and it's happening now outside of mortgage as well.
Any other questions? Yep.
How does it secure from a cyber perspective? How do you know that the data could get wiped out completely if somebody?
well, look, I mean, for obvious reasons, I mean, the parent company of MERS is the Intercontinental Exchange. I think it's, and we probably don't want to publicize this, but certainly one of the most, attacked domains in the world. Vigilance, and a bottom line, every day we want to think like the bad guys, okay, who want to get into our data, want to look at PII. They want to reverse engineer. It's a challenge, all right? and it's not trivial otherwise too. And I think for a fundamental overhead issue, I mean, we've seen some of the vendors who are here have, engaged in data breaches or at least been involved with data breaches, not engaged, but have been, attacked. I can't promise anything. If I did, I'd be a wizard. But what I can say is we get up every day and we just think about the way the bad guys think.
All financial institutions have safeguarding obligations, and whether the data is distributed in individual pieces or whether it's all in an eNote, you have the same rigorous obligations. So.
Yeah, and you're always trying to figure out what's the vector of attack, right? Is it going to come through a client, perhaps? Is it going to be hijacked from some other entity? Fortunately, I think it goes back to the distributed nature of it. As long as the data is out there among a bunch of counterparties, we think it's safe. But does that answer your question? Do you want to know what kind of Shaw algorithm we use? All right.
I mean, I guess I know you can't answer the question with it directly, but just, what's the chance that I don't know, the data could just be, like the data breaches, and then is there a possibility of data loss?
Oh, yeah.
Well, no. I mean, I think look, we've got BC for all the. I mean, look, RTO, RPO. I mean, think about it. We do 80 million trades at the New York Stock Exchange in a microsecond. That is replicated. We can reverse engineer every trade that occurs almost real time. So for this as a longer dated asset, we feel pretty comfortable we can handle it.
I think I saw one other question. No. Oh, yeah, right here.
What's the scale of adoption so far?
Oh, That's a good one. I think we're going to get to that. Should we? Maybe we'll hold that thought if you don't mind, because we have a slide on that.
On the chart.
Yeah. Yeah, we'll keep you. So
You get the Mardi Gras beads.
you do. Maybe it's obvious, but I think in case everyone's wondering why, we thought we'd just do a quick run through of, why is the industry making this shift? What are the benefits they're seeing? What are the risks that are being mitigated? I'll start with just the first example here, faster delivery and improved control of collateral. So simply put, when we walked through that flow together, you saw that the investor could have that eNote in minutes, or seconds actually, after the closing. The same thing goes for a warehouse lender. If a warehouse lender was part of the ecosystem, they're getting that note within minutes of that closing. So James, maybe you could touch on the next two, particularly since you've mentioned a little bit about the QC process. What does the QC process look like? Where do those operational efficiencies come in?
So there's, I think there's the doorstep, right? The doorstep is when the eNote arrives in our eVault, and I think, we touched a little bit on that here. The eNote is interrogated when it arrives at our eVault, right? So it has to comply with MISMO standards. It has to be tamper sealed. I think the word hash is used. Hash is just saying it's unaltered, right? So it's an encrypted seal on that eNote. Also, there's cross-validation between the XML and the HTML, what they call ARC validations, right? So these are all quality assurance type features that are built into the eVaults, in addition to what MERS is doing on the eRegistry platform itself. I can't go into detail what we do inside the bank, but suffice to say, we've built processes. So when we look at eNotes from a Deutsche Bank perspective, it's not really to do what we do in paper world, right? We have that fiduciary responsibility, but we're going to take full advantage of the digital pipe that comes into us. So we have processes internally to cross-validate between the metadata that's supplied by the client through a system-to-system integration to the eNote. And then we have cyber is a big topic, right? So every time we sign a legal agreement, we spend time with our clients discussing cyber, right? What are your cyber protections? At DB, we feel pretty good because we have an on-premise solution. So in other words, we've taken on the eVault and we've not put it in the cloud. In our case, we've actually put it on DB infrastructure. So it sits behind our firewalls. The architecture is actually quite complicated, right? So eNotes never arrive directly into your network. There's a kind of like a lower and an upper environment. So it kind of arrives here, goes down here, and then comes in this way. So there's a lot of standards that are applied. That's beyond my expertise. That's more in the tech world. But cyber is huge. Yeah, I mean, I feel very good about this, and I think there is, MERS is talking up the central e-registry. I think it is important, right? If 80% of loans that are originated in the U.S. sit on the MERS platform, to me, that says it all, right? It's like a tech firm is only valuable as to its content, right? So if you have a big address list and a big customer population, that's huge, right? And I think you guys have that at MERS, and that's not easy to replicate by another fintech. So, yeah.
Yep. I do want to get to your question about figures, so we'll run through these next few, but the e-closing platforms obviously have controls that would prevent the borrower from proceeding without signing where they need to. They can't sign with an incorrect name. The co-borrower can't sign where the primary borrower was supposed to. You can't end the closing process if you haven't signed everything. As Margo touched on, there are no endorsements because it's replaced with those transfers of control and location. And so you have an audit trail on the e-registry, and you have audit trails in your vault to rely upon. So there's no such thing as a missing or blank endorsement to worry about. And lost notes. So virtually impossible to lose an eNote. And should your copy become compromised, for example, you could, of course, get a copy from one of your counterparties or from your originator, and then that ultimately can become the authoritative copy based on your location on the e-registry and that identifier in the vault. But to get to your question about numbers, and Chris, I know 2019 was a banner year for eNotes. Didn't happen overnight. So maybe you can talk a little bit about what it took to get us here. To get us here.
Well, look, I mean, it's hockey stick growth, and it seems appropriate that it's born of Detroit, given the metaphor. But to the extent that a lot of this was design and architecture, and James knows this, scalable protocols, investing in the infrastructure, trying to figure it out. What I will say, which has been really interesting, so I think we started the year at the e-registry with 39 counterparties doing first transactions. We're almost at 80. So this whole infrastructure network is building, right? MERS has got 5,700 customers, or at least members. So, that will be replicated in concentric circles as they build out and figure out who the warehouse lenders. I think the slide that was previous, or at least there's a reference point to it, going back to liquidity, can I pledge it as collateral to the Home Loan Bank? Can I sell it into Ginnie pools, right? There's conversations around that, what that would look like, to the extent that trailing documents are eligible in Ginnie issuer pools. We're having those conversations. So what I think, at least as advocates, I don't want to sit there and say, hey, eNotes are great. What I want to see is a digital experience, right? And I think that's where we're all driving toward. And to the extent that we have to kind of tick off these things that we say, okay, I can sell it, I can pledge it, I wouldn't say rehypothecate it, but I ended up in a circumstance where, and Margo kicked me under the table, but I'd sit there and say, to the extent that it's fungible as an asset, and that's what we're looking for.
Yeah, and the numbers that we just looked at, we got to those numbers with Fannie and Freddie accepting eNotes for, I think, well over a decade at this point. But now we have Ginnie Mae and the Federal Home Loan Banks all having made announcements and making steps towards the acceptance of eNotes, which I think is arguably a big game changer in terms of
and we've had people from the private label domain come in and say, hey, what would this look like? What would the no language look like? What would the rating agency treatment would be? Because we think it's going to be really novel. And I think at the end of the day, think about your counterparty, right? Investors are going to say, it's real, it's live, it's digital, I can replay it. I don't have to go, to a third-party provider that says, okay, let's go bring out, and James does this for a living, I don't have to go, okay, I've got to go to a doc file, right, and go through the paper. I can search, I can,
It's accessible.
Yeah, it's accessible and searchable.
Auditable, trackable, traceable.
Any other questions? Yes.
Oh, well, it goes back to the cyber question,
Well-
right? So
And Margo, I think maybe could
Oh,
you
yeah.
talk about the difference between a holder and maybe a holder in due course?
yeah, that controller position. Yeah, how do I ensure that, right?
And to clarify, I'm not talking about loss of PII, that's I'm talking about someone changing it so instead of ABC Bank having the ability to copy the tax and saying, X, Y, Z.
Well, no, and I'm going to jump in. It's just, our industry has fraud, right? You're never going to be able to get around fraud, right? There'll always be fraudsters out there to the extent that some entity is presenting himself maliciously. That's what you have to do, but you certainly have better protections.
Yeah, I mean, fraud is fraud. I think what he's trying to get at is if the MERS registry is hacked and someone changes who the controller is to somebody else, right?
Yeah,
Okay.
and what they'll have to go out to the vault.
Yeah,
right? And
exactly.
the
I
vault
was just
will
going to say,
hey,
but the
it doesn't match.
eNote isn't exactly. So, but the eNote isn't stored at the MERS registry. So then you go to the location, and you go to where the eVault is, and it would be an evidentiary issue. Really, it will be. You'll have to pull all the evidence and all the audit trails and do the forensic into what happened. I mean, but it's trackable, traceable, auditable. At least you'll be able to do that. And then a court would need to decide.
Yeah, but the courts have ruled in favor. What do we got?
Yes.
14 case law in terms of presenting the e-registry compatibility, and said, hey, look, I've come in. You got a question?
E-registries been around
Well, you would break the eNote. I mean, I just
Yeah, you break
I mean,
the.
I'm putting my analytics
And
hat on. You'd actually, because remember, well, you don't know, but here's the deal, right? With eNotes, eVaults have to be configured in a very specific way with very specific relationships. So to hack in and disrupt those relationships would create a break. And the way eNotes travel is through a notification process, right? So eVaults talk to the MCENTEE registry, and the MCENTEE registry talks back to the eVault. So there's this ping that occurs, and then there's the interrogation of the eNote. I mean, it's an ultra safe. I mean, you know, and I'm impartial, right? Because I'm a custodian, but
There's lots of ways.
Having looked at it,
Yeah, there's lots of ways
It's a pretty powerful.
to prove it up, and I suppose you could say the next stage, you know, the next iteration would be to have a distributed ledger, right? So that there's not just one, but that's the.
Yeah, and you'd
idea.
also need to have the hash of the eNote to be able to do certain types of transactions on the e-registry. So it's really something that, I mean, I'm not saying that it's impossible, but just changing a rights holder position it's not a matter of just changing the rights holder position. You have to be able to.
And you know, it's a pretty elegant architecture, right? To the extent that it's scalable. I mean, could somebody come up and said, if I did a greenfield design, you know, we've talked to other countries that I've looked at, you know, hey, look, we're going to do a blockchain in XYZ country, and I said, well, how did you have property and land rights in the past? They said, well, my machete was bigger than the other person's, right? And so, you know, I don't have, you know, 400 years of dirt law that I have to cross-reference and continue to abide by. So I think the multiple layers, both of the technology and the cross-reference to the legal codification is where it all comes down to, you know success.
If I may, I think just you know, as a participant in this journey, there have been milestone events, right? So the huge increase in 2018, that was because you had the warehouse community step in, right? They said, okay, finally we're going to fund eNotes, and our custodians, you know, plural, need to have eVault capability, right? So that happened. And I think, you know, what's exciting is Ron, right? Ron is another big, you know, push. And certainly Ginnie Mae rolling out, you know, their eVault initiative, which, you know, CAMELIA is working directly on this year, is another big milestone event, right? And then you have all these small events happening, right? So it's like, you know, Ron adoption, 22 states, you know, 80% e-recording, you know, e-notarization, et cetera, right? So it's kind of this groundswell of things that are happening, and then people having the vision of, and you know, obviously one company has had the vision of basically doing a full vertical integration, right? So, you know, making all the pieces work nicely aligned, and you get a good success story, right? So, and it's happening. It's happening today.
Yeah, and just to echo James' thought on this is that, I mean, it's important that people educate themselves. I mean, look, we're obviously, you know, we're talking our own book here, right? Because this is what we live and breathe every day. But you know, there's a lot of misunderstandings. They're like, oh yeah, that's just like paper, right? You know, to Margo's point, right? No, it's not. It's not. And you know, we've sat with some of the best counsels, you know, certainly in the U.S., and some are probably in this room, in terms of going, okay, you know, let me ask the, you know, dumb question, but let me ask, what does that look like in the, you know, bankruptcy, counterparties, you know, action, cause of action, you know, pools, trustees, and all these permutations of it. And we you know, so we tell people, and we do a webinar series certainly for MERS. I mean, we had, I think it was through the fall, we did 3 webinars, and this goes more broadly to digital. I mean, the eNote is great, but I mean the full digital e-recording, e-closing, closing disclosures, and you know, there's like 1,000 people on that. And I mean, it runs the gamut from the largest lenders trying to figure out what it looks like for retail delivery, to how I buy for correspondent, to how I'm warehouse lending against it, to conduit purchase. So there's just this whole, again, ecosystem that has to build up around it.
Right. Well, if it's any indication of how determined we are, we've been ignoring this red flashing light. for about 6 minutes. But we're all available if you have questions afterwards, and just thank you again for being so engaged and for the participation today. Thank you.
Okay, yeah, thank you.